Hello and welcome everybody to today's training webinar, How to Trade Gold, presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we'll be going through live market analysis. We'll go through a watch list of trading ideas, analysis of where we're looking at gold, silver and platinum to be heading next, how to trade gold, and of course, as always, we'll be answering any questions you may have during today's session. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, energy and the crypto markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on binary.com too. Our team of experts has trained and mentored thousands of traders from all over the world to invest in the financial markets with confidence using our exclusive strategies. For more information on the Gold and Silver Club and our expertise, you can visit www.thegoldandsilverclub.com. Okay, excellent. So today we're going to get right into it, and we're going to be going through the opportunities and the secrets that we see in the market for trading gold, really how to get an edge when you're trading gold and what you need to look at when you are trading the metals. So number one is understanding news trading. Last week on Wednesday, we had the FOMC statement. That provided immediately, actually, after the FOMC statement, a breakout opportunity on gold, where we saw gold break out above $1,300 US. In fact, it broke out to $1,309 after the FOMC statement. The FOMC statement provides very regular opportunities and also non-farm payrolls for breakout moves on the metals, and having these in your trading diary and in your schedule is very important. So ideally, if you're trading the metals, you want to be keeping the days of FOMC statements free in your diary so you can trade the breakout moves that we often see. And of course, if you have flexibility to be in front of your screens on non-farm payrolls, which is the first Friday of every month, that is ideal too, so that you can execute trades off the back of that news item. The Federal Reserve announcement, the FOMC statements, there are 8 a year, 4 of which have a press conference afterwards. The expectation, we've had 2 interest rate hikes so far this year. The expectation is the Fed will be delivering 2 more interest rate hikes between now and the end of the year. And as head of the Federal Reserve, Jerome Powell has more influence over the US dollar's value than any other person. His speeches, they're followed very closely by traders, and that presents regular news trading opportunities. We then have non-farm payrolls. Non-farm payroll is a key fundamental driver for the precious metals. It is released the first Friday of every month. One of the reasons the non-farm payroll data is important and why it matters is the Federal Reserve assesses jobs data to determine whether the economy is strong enough to withstand interest rates. So that is a very important way for the Federal Reserve to gauge whether the economy is ready for the FOMC, for the Federal Reserve essentially, to increase interest rates. We often see some big moves on the gold market off non-farm payrolls. Now, one inverse correlation to gold that you must pay attention to if you're trading the metals is the US dollar index, and in particular the US dollar index, which has a very direct inverse correlation to gold prices. So over the course of the last couple of weeks here, and in fact last week after the European Central Bank announcement as well, the US dollar has broken out to the highest levels since November of 2017. And with that, the gold price has broken down to the lowest levels this year now. It's broken down to 6-month lows. In fact, we broke down to 6-month lows today, which we'll have a look at very shortly on the chart. There's a very direct inverse correlation between the US dollar and gold. So essentially, if you're trading gold, you must also be watching the US dollar. The gold to silver ratio, this is another very important indicator when we're trading gold and silver. One of the key ways to utilize this is essentially looking at extreme levels of 80-to-1 is a great level to look at, and we've actually just gone through this today in detail on YouTube with our latest update, our metals update today on the Gold and Silver Club YouTube channel. how to use the gold to silver ratio, but I'll talk you through this as well in terms of what you need to look out for. So essentially, the gold to silver ratio, when it hits 80 to 1 or higher, this has historically provided a really good time to be looking to buy silver and also gold. That means when the ratio gets to 80 to 1, it takes 80 ounces of silver to buy 1 ounce of gold. And it happens approximately every 12 months that the ratio hits this level, and then afterwards we see a low get put in for gold and silver, and it often really gives a great buying opportunity. So when the ratio is high, it tends to favor silver over gold because silver relative to gold is much cheaper. And that has played out a lot of time in the past with the gold to silver ratio. Now, recently we hit the 80 to 1 level over the month of April, and we've continued to see a decline in price since then. And with the gold to silver ratio breaking down, last week we saw silver break out to 2-month highs. We saw a significant move back above $17. It's been interesting though, because over the last few days, we have seen a big correction following on from the European Central Bank announcement last week and Mario Draghi's press conference, and we've seen a reversal on the dollar breaking out, and gold and silver actually trading right back at these previous key levels of support. So silver right now is trading just above $16, and gold right now is trading around $1,272. The gold to silver ratio, very important. But again, if you want to find out more about that, there's a further training just on our YouTube channel. So if you want to go across the Gold and Silver Club YouTube channel, make sure you subscribe to that to get the latest reports and alerts, but we go into more detail on our gold and silver ratio trades. Now, the third secret to trading gold is research-driven trading. So from this point of view, this is where you're looking at the previous cycles, you're looking at seasonality, and you're looking at commitment of traders' data. So you are understanding what the overall net long position or short position is from the hedge funds. Now, if we look at the seasonal pattern for gold, most years gold tends to bottom out around the summer months in June and July, normally around this time of year actually, around sort of the end of June as we get into the beginning of July. So we're now moving into the third week of June as we go into 20th of June at the moment. So we'll be looking at the potential for a low to get formed. It actually looks like a low is quite close to being formed on the metals. Platinum started to capitulate to the upside today. We'll have a look at that on the chart very shortly. One point that you should be aware of with respect to the gold to silver ratio and the gold cycle here is the fact that frequently we do see gold tend to rally over the month of January, which is known as the January effect. And we've seen this time and time again. It's been a cycle that has appeared over the last 5 years, 15 years, 30 years. It's a very strong cycle in the gold market, and it's something that you should definitely note in your trading diary. If you've been trading gold for a while, gold and silver and other commodities as well, platinum too tends to do this, and commodity currencies like the Australian dollar, US dollar, note its behavior at the end of December, and as we go into January, often we see a bottom get formed in. Nothing guaranteed, but it's quite frequent to see this cycle and then this rally over the month of January. We've got a lot of research which shows that seasonal cycle. And then if you marry that up with what funds are doing, so money managers, hedge funds, if they're buying at that time of year, at the beginning of the month in January, which is where we tend to see a lot of buying, a lot of funds are getting their positions ready for the year and they're starting to get exposure into the metals. When that marries up with a buy signal technically on the chart as well and seasonality, it gives you a really great way to get an edge with your trades, where you're not just looking purely at the technical charts, you're marrying that up with your research, you're understanding what else is driving that market and has the potential to move it higher. I mean, this has been something that we've seen time and time again. I'll go back to beginning of 2017, where we got into another fresh position at the beginning of the year here, trading around 1,077 US dollars per ounce in terms of our entry. And then we've seen here within 7 weeks a breakout of 1,830 points, which we've capitalized on that whole rally to the upside. So it's been a very lucrative trade opportunity. And again, we've seen that follow through time and time again, where we see this constant rally over January and February, normally corrected moves over June and July, lining up for, again, this cyclical move and buying opportunities as we go into August and September, which is the start of the wedding season in Asia, which is often where gold prices start to get well supported again. The strongest months of the year for gold tend to be January and August and September, and actually October to a certain extent as well. So we're kind of coming into that period as we go into the next quarter. And now could be a really good time to actually look at building some longer term positions in gold at these levels as well. Now, research driven trading, it's trading really based on certainty. So you want to have as high probability as you can get in the market before executing a trade. And we've seen that seasonal cycle play out historically time and time again, where we see this rally over January, corrected move as we go into the summer, and then we just see the cycles play out. And we're at the moment right at the lower end of the cycle, where potentially we could see a big move here in the weeks to come. Now, again, this is gold going back to the beginning of this year as well, in 2018. In fact, we had our buy signal a bit earlier on this year. We got this signal over Christmas or just before Christmas, where we executed our long entry at 1,255 after the Federal Reserve increased interest rates, and after that is where we executed our long position. And you can see here it's been quite lucrative, 980 point gain here over a 4-week period for gold, yet again playing out from a seasonal point of view. The fourth secret to trading gold is identifying buy and sell opportunities based on price structures. So when you're marrying up research with the actual price structure on the charts, I would look out for this price structure in particular, which is a V-shaped reversal. A V-shaped reversal tends to occur in a downward trend, often signaling a start of a trend reversal. We're starting to see the beginning of one occur at the moment on platinum. The neckline of the pattern is formed by the highest point prior to the formation of the V, and then we look out for a breakout, and that's what we look to capitalize on when the low is in. These V-shaped reversal patterns are prevalent in the commodity markets. They can be utilized in the opposite way as well. We've just done this recently. We've taken advantage of a corrective move on copper, where it's given back pretty much all of the gains over the last couple of weeks. It broke out to 2.5-month highs, and it's now given back all of those over a 5% decline over the last week, following on from the FOMC statement, which we've been shorting on copper. And this is a V-shaped reversal pattern in the opposite direction, where we see a sell signal and a trend reversal. The neckline of the pattern is then formed by the lowest point of the formation of the V, and then we look for a breakdown in price. And often these can be very fast in terms of velocities. You can see an example here where a breakdown of the neckline. I'll show you on copper shortly as well, but you can see a fast increase in price to the downside. The fifth secret to trading gold is as follows. The fifth secret is regarding having a diversified portfolio. So when you are trading the metals, essentially you want to have exposure within a diverse portfolio, where I would suggest, especially on the way that we trade commodities, you want that organized between precious metals, between commodity currencies, and also between the energies as well. And a lot of you are aware that we also trade the cryptocurrencies too, although note the cryptocurrencies at the moment, they're only available for traders on MetaTrader 5 for binary.com who reside outside of the EU. But essentially our split with exposure on these markets is 22% into precious metals within our portfolio, 36% in the commodity currencies, 24% in oil, gas, and energies, and up to 18% exposure in the cryptocurrencies. This is within our portfolio. So having a well-diversified portfolio also very important as well. So the 5 secrets to trading gold include the following. Know when to trade high probability news, utilize the gold to silver ratio, use research-driven trading, identify buy and sell opportunities, and also portfolio diversification, all very important when you're trading gold. And what we'll do, we'll have a look at the charts, we'll go through gold, silver, we'll have a look at platinum and copper as well, and we'll have a look at some of the price structures that are forming at the moment. When you're taking a trade on binary, essentially you'll have a deal ticket that will look exactly as I've posted here on the slide. And the way that we like to trade is rise and fall trades, or higher and lower. So essentially we are capitalizing on the price either going up and down during a specified duration. Now, when we're executing a trade like this, we are looking typically to be in and out of the trade for a shorter term time frame if it is a news trade. So we might be on an FOMC statement or non-farm payrolls, in and out of the trade within an hour or two. If it's a more swing. If it's a swing trade where we're looking to take advantage of seasonality, we would be happy to take a trade and be in it for several days if needs be in order to see that follow through move. It really depends on the type of trade that we're executing. On binary, it's very straightforward in terms of start time. We always look at start time now. The payout is obviously your risk on the trade. So whatever you are able to or willing to risk on a position, which would depend on the size of your portfolio. Okay, so when we're executing a trade, the stake is what we're willing to risk on the position, and the payout is what we will make if the trade wins. So if we win the trade, we get the payout, which in this scenario is £2,500. If we lose the trade, our risk on the position is £1,415 and 65 pence, and that's what we would lose if the trade was to go against us. But the 2,500 is what we would make if the trade wins. The way you win a trade on binary essentially is if the price closes 1 point higher than your entry price. It can close, of course, a lot more points higher than that, but it only needs to close 1 point higher than your entry price over the specified time frame for you to win the trade. And that can be either for the price to be higher or lower. You don't need a stop loss, and you don't need to take profit. And it's very transparent in the sense that you know exactly what your risk is up front. You select exactly what the payout is and what your stake, and you generate what the stake would be on that trade. Okay, good. So I don't think there's any more questions on that, but we'll have a look at the metals. I think today what we'll do is we'll keep the analysis very specific to gold, silver, platinum, copper, just the metals today. I want to go through in detail with you on Friday on the Commodities Corner, the OPEC meeting. So we've got the OPEC meeting coming up on Friday, and I'll be looking at oil in a lot more detail with you on that session, okay? But today we'll go through the metals because today's webinar is very much focused on how to trade gold, okay? So with that, I'm going to bring over my charts to you, so hopefully you should be able to see that very shortly. Okay, so just want to confirm you can see my charts. Okay, first of all, let's have a look at copper. And the reason I want to have a look at copper is because we have a classic V-shaped reversal pattern on copper, which we've essentially benefited from over the last week here. We've been selling into short positions on copper ever since we came up and retested the December swing highs. Copper broke out to 2.5-month highs and since then has reversed. And this has been a fantastic sell short opportunity. We just continue to see copper break down over the last week here, and it's provided a lot of profit to us at the Gold and Silver Club. We've actually had 3 separate entries on this whole move to the downside here. If we have a look at this from a price structure point of view as well, and we have a look at this from a V-shaped reversal pattern. In fact, let me go one step further than this, and we'll just take out an additional indicator here so you can see exactly what we're looking at from a raw price structure point of view. Now, this is a classic V-shaped reversal, and we've essentially sold into that. You can see where we've had this sort of price structure which has occurred, and it's been a V-shaped reversal top, and there's multiple entries on this, but essentially you can see where it's really started to break through the neckline and really pick up velocity and momentum to the downside. We've continued to break down over the last week. So copper has worked out really well for our sell short. Now, what I'm looking at the moment, one of my favorite setups, which is starting to develop, is platinum. And platinum, we've been waiting for a capitulation move here on platinum. And I've been looking at support to come in for platinum, essentially at the lower Keltner channels. And we've now, today, with spot on bounce. You can see the amount of times platinum over 2018, going back to March, April, and also May as well, has bounced off the lower Keltner. Very useful if you trade commodities to follow Keltner channels. And we've got a capitulation move. So we're long now on platinum. We've executed a new trade. The expectation is that we would get a V-shaped reversal pattern recovery. This is exactly what I'll be looking out for. And we revisit coming back towards the swing highs, which is where we broke down from after the FOMC statement, which was around $915, where we came into some resistance. So we're now long platinum, and I'm looking for a potential recovery. Now, as always, there's risk associated to any trade. Nothing is ever a guarantee, but at the moment, we've got the first signs here that platinum is starting to recover, and potentially we're going to see a low get put in here. We aren't quite there yet at the moment with respect to gold. Gold is still treading water. It's been lagging throughout most of this surge to the upside, even when copper was breaking out to 2.5-month highs last week, and platinum had also broken out towards the monthly highs. Gold was still struggling. Gold is trading at $1,272 per ounce at the moment. I wouldn't be surprised to see it just break through yesterday's low and revisit around 1,267. That's the next level, and then below that, 1,263 US dollars. Those are the levels I'm looking at the moment with gold. Again, if we look at it from a point of view in the cycles that gold typically tends to move between, I still see more clean air for a breakdown low. I think it's still vulnerable short term. I suspect on gold, we're going to put in the low this week. The low might already be in. It's possible that the low is in if tomorrow we break back above today's high tomorrow. But for the time being, gold does look a little bit vulnerable where we are poised at the moment. I would suggest it could still go lower. And then we want to move over to silver. Now, silver, the gold to silver ratio has been on its way up since this corrective move last week. It's sitting around 78 to 1 at the moment. Silver, prior to today's move, we've executed a lot of trades around this level before. We've been buying, normally we buy silver at this level. So it's trading around $16.29 per ounce at the moment. It might be that this is the low, where you can see from just a very clear price structure point of view, you've got support and resistance on the chart here, and we're right back at the lower end of support. What I'm looking out for is whether we are going to get one more flush out and a round of selling, taking us back to around $16, which would be, in my opinion, a good entry price. I'll be looking to pick up positions at that point. If it was to flush out further, I think this would provide a really good opportunity around $15.85 per ounce here if silver was to get that low. Again, it might be that the low is in. We had a breakout to 2-month highs here last week around the FOMC statement. Silver then got slammed afterwards and broke down over 3% on Friday and has continued to follow through at the beginning of this week, but it's hovering around $16.30. So I'm watching silver for the potential to re-establish a long position. Also note, commodity currencies I'm looking out for as well, like the Australian dollar, US dollar, purely from a cyclical point as well. It's right back at the low Keltner channel. So it's a bit aggressive to buy Australian dollar at this level, but I suspect we could get a reversal soon around this zone. We're right back into oversold condition. And you can see Keltner channels. Typically, the Australian dollar spends very little time at these levels. It's very oversold at the moment. And I'm looking for a bounce higher soon for the Australian dollar, US dollar as well. So essentially, I suspect this week we could get a low start to get formed in the metals. First of all, first mover has been platinum. So platinum, we've executed a long position on. Now we wait and we see whether we start to see copper. Copper is finding support as well at the recent swing lows, where the copper starts to then follow suit. Gold has been lagging, so I'm not expecting gold to start to get a bid immediately. But silver, I'll look out for tomorrow, this inside candle that's formed, to see whether silver breaks back above $16.35 per ounce. So I'll be watching to see whether silver does reverse from this zone, and gold as well. Gold still looks vulnerable to potentially a little bit more selling. This price structure would indicate that tomorrow we could get another round of selling and just break down around to about 1270 to 1265. That's what I'm looking for on the chart right now. Gold, again, major news items that you want to look out for are FOMC statements, which are very lucrative to be trading gold, non-farm payrolls, European Central Bank announcements, minutes of the FOMC. There are 8 FOMC statements a year, and after every FOMC statement, 3 weeks later, we have the minutes of the FOMC too, which often provides a really good opportunity as well to trade gold, silver, platinum, palladium, and also copper. In fact, lastly, let's have a look at palladium. Yeah, palladium has actually had a fairly sizable pullback. It's given back most of the gains here, back to about 957 US dollars per ounce. I will keep that on the radar as well, but very much like gold, that looks weak right now. Platinum is leading at the moment in terms of the bounce that we're seeing on the metals at the moment. So I hope that helps and gives you a little bit of assistance when you're trading gold. Again, we put out a new video today on the Gold and Silver Club YouTube channel, which talks you through how to use the gold to silver ratio when you are trading gold and silver and looking for a bottom in those markets. That's worthwhile having a look at if you have some spare time later on today or during the week. And of course, if you'd like to get access to our live trading rooms during the week as well, we do provide a live trading room program for all of our traders at the Gold and Silver Club, and also access to our custom-built market data and news trading platform. So essentially, the link to make an application to join the Gold and Silver Club live trading room, it is very simply www.jointhegoldensilverclub.com. Okay, link is in the description. By being a member of the Gold and Silver Club, you get invites to all of our webinars, so all of our live training rooms where you also prepare for non-farm payrolls and FOMC statements as well. This week, and especially tomorrow, we'll be getting ready for Friday's OPEC meeting. We provide real-time trade alerts instantly by email and SMS for all of the trades that we're taking, a weekly trading plan with technical analysis and fundamental research. You have access to our Private Members Academy website with a range of training material, strategies, signals, and discussion boards, VIP phone and email support directly from our senior traders, and platform setup and configuration with our customized charts and all of our indicators. So again, it's www.jointhelivetradingroom.com or jointhegoldensilverclub.com. So with that, I hope you all enjoyed today's session. We'll definitely catch you back here for the next Commodities Corner as well. And I wish you all good trading. Okay, so thanks very much to Sharice and the team at binary.com for putting on today's webinar, and we'll see you all on the next one. Thanks, everyone. Take care and good trading.